Our markets have closed on Wall Street and we've had a relatively quiet day by recent standards, continuing to calm down after last week's great excitement. The big interest on Wall Street was bookended by two giants from the tech sector. We started with dreadful results from IBM. What was perhaps interesting was that didn't manage to derail the market as a whole. After the market closed, we had yet more brilliant results from Apple, far better even than optimistic expectations. What's perhaps interesting with Apple is that it's still not quite got up there. An hour after those results came out, as I'm recording this, it's still not quite got back to the all-time high it set last month. If we take a look in context, this is how Apple has done compared to the S&P since the iPad came out at the beginning of 2010, and you can see even though the iPad is now beginning to disappoint people, it has still helped Apple to quite extraordinarily good performance over that period. Apple has now become quite an interesting tell for investor sentiment. If people choose to be glass half empty rather than glass half full, or in this context to look at iPads rather than iPhones, that might tell you something about negative sentiment. Other than that, other than seeing where Apple trades, it's very interesting today to notice that spreads on European peripheral debt are still looking a little elevated. That's one to watch. The most important data point that we can see coming this week will be US inflation on Wednesday. That is the centre of the scare, and that continues to be what is most important in driving this market.